This is Network 18. And you are watching CNBC TV18.
Minor recovery space that will get hit almost relentlessly is real estate. Unitech is now down 5% again. DLF after yesterday's showing is down 4%. For some of the others, the cuts are even harder like Orbit and Omax down between 6 to 4% this morning. Devesh Kumar of CENTRUM is in to talk about trade. Devesh, morning. What's your own sense of what we might end up doing for the market by the end of December? Is there still a chance of that big rally, you think, or might the markets actually move lower?
I think December is a month where market should find its bottom, and I define this as a phase where we are looking for stability, because till some time back we were in crisis management phase, which is over, and as soon as deleveraging process reaches its stability phase, we will find that selling or forced selling by hedge funds, that will reduce. And in December, liquidity situation domestically is also very tight, and because of that, a lot of fears are there that people will default, and whatever worse one can think of is being thought of. And as a result, what we feel is once this month is over, and in case we do better than what we fear, then I think market should bottom out, and then from there a fresh beginning will be made.
Devesh, morning. What have you made of the economic data which has been coming in these last few days? I mean, whichever number that you look at, including the auto numbers, do you think we've just begun reporting of a series of bad numbers? And do you think the market has priced all of it in?
I think all this was anticipated. What happens is, for last 2 years, if you look at tightening by central bank and taking interest rates to a higher level in order to curtail Indian domestic demand, in order to control inflation, it was very clear that with a lag, all this is going to play out, and interest rate sensitive sectors, they'll find that the demand starts shrinking, and offtake will be affected. On top of that, you have a global situation where I think BPOs and others, they are cutting down on jobs and all. So I think this was expected. But I don't think that it will be right to extrapolate it and say that it will decline further and we are yet to see worse and all such things. We feel that next 2 quarters, that is December and March quarters, will be bad for Indian corporates, where because of slackening in demand, because of tight liquidity, because of high interest rates, they will report bad numbers, and that is already in our expectation. And once liquidity situation starts improving, you will find that interest rates start dropping. We feel that by June, inflation rate will be in low single digit, between 0 to 3%. And probably by October, interest rates will be in single digit. In case this materializes, then you will find that 2010 is going to be last 2 quarters of 2010 FY will be very good for corporates, and mood will be different. I think in India today we are seeing all these problems at a higher level, mainly because we were overtly concerned about inflation, and I remember finance minister and others also making statements that will sacrifice growth for inflation. We tried to control inflation, which automatically is going to come down because of global situation, but we sacrificed our growth. I think the only way out is increase infrastructure spending, which we feel that after election, whosoever takes over the government, he will have to do it, and that will improve a lot of things for India.
How do you read the political turf right now, Devesh, over the next few months, both state and central elections, and what impact do you see that having on the market in the interim?
I think in the market, at this point of time, no big economic decisions are being expected. So I think post-elections, when a new government takes over, major announcements will come by October, because in case a government comes in May, it will take 4-5 months to stabilize. Till then, I think internal security is a big issue, and and I think some cosmetic changes will be made in order to divert electorate's attention to to make them feel that things are changing. But I don't see any major changes taking place until elections. I think investors will be very watchful of developments. Post-election, I don't see very different outcome, but whosoever the new formation or coalition, they will start taking policy decisions with a 5-year horizon, and that is going to change things.
What are you hearing about redemption pressures, Devesh? We're hearing about some hedge funds, including Asia hedge funds, actually putting limits on redemption calls. Is that problem still unfolding through December?
I think this hedge fund redemption and even in domestic segment is likely to ease out by end of this month. The main reason being, in India, liquidity situation will improve in a big way because whatever CRR cuts and other things, it plays out with a lag, and it will play out with a lag by January, February, March, things will improve. Second is, if you look at global hedge fund redemptions, it is mainly outcome of this deleveraging process, and it appears that with the policy response that we are seeing from Fed, from US government, from various other governments in Europe, I think withdrawal of liquidity is not going to be big the way it was feared earlier, and that will change the situation in January, February, March.
Any longer term ramifications you fear, Devesh, from the terror attack Mumbai went through, especially on sectors like tourism, aviation?
We have talked to a lot of people, and I think those who have been to India, I think for some time there will be some sort of precaution that they will take, but I think we'll come back to normalcy soon. But in case government doesn't take any effective measures and these incidents are repeated, then probably I think higher risk weightage will be attached to India, and then valuations will, to that extent, will get moderated. But I think one or two isolated incidents will not make much impact. We have to take steps and we have to curb it at this juncture.
Thanks, Devesh, as always, for stopping by. 2600 holding. By the way, hotels are coming under quite a bit of pressure today. Indian hotels is now down 6.5% on large volumes. So it's gotten all the way to 37. EIH, that's been relatively resilient, is also down about 4%, although the volumes there are lower. And stocks like Hotel Leela and Taj GVK are struggling today. So hotels are looking quite a bit under pressure. We'll take a break and come back.
This is Network 18, and you are watching CNBC TV.